What's going on, traders? Welcome to a new training video. Today's topic is going to be about one of the most commonly used technical indicators in the world of trading. It's called the stochastic. A lot of you watching this video have probably heard of it. The reason I'm making this video is because it's a really commonly used indicator. It's a great tool as well if you know how to read price action. Many traders, when they come into the market, this is a common indicator that they like to use. Most traders, when they come into the market, they focus solely on indicators less than price action. This indicator combined with price action and your understanding of the market can really be a useful tool. So we're gonna break down what the stochastic is in this video, maybe some ways on how to go about using it or helping you guys just understand it in general and how you can maybe equip it in your trading with your technical analysis in shorter term periods or even in longer term periods of the market. So one thing I want to help you guys understand a little bit more at a beginner level is a term called overbought, or another term called oversold. So we have the terms overbought and oversold. These are terms used in trading to describe situations where a market or any asset like a currency pair in Forex or Bitcoin in cryptocurrency has moved too far in one direction and a reversal could be coming. So when we talk about overbought, this means that the price has risen too much and too quickly. So when we talk about an overbought stage, it means price has risen too much and too quickly. And the asset or whatever instrument you're looking at could be considered expensive or overvalued, basically. That's an easier way to put it. Traders expect that price might fall soon as there's not enough buyers to step in to keep the price moving higher. So it doesn't mean that the price goes down right away when the market's overbought. It's basically a phase that the market goes through and it can last. It just means that the buying activity is starting to turn over. It's not there as much. Selling activity is starting to come into the market more than the buyers. So overbought often just signals a potential shift in the trend and it appears after a very strong uptrend. Oversold, pretty much like vice versa, like the same opposite type of conversation we could have when we talk about oversold. This means that the price has dropped too much too quickly and that whatever instrument, whatever Forex pair, or it could be crypto, it could be Bitcoin, right, is now considered cheap and undervalued. Typically overbought and oversold stages are times where there can be maximum fear or maximum greed in the market. So extreme greed and extreme fear are other words to put it. Typically in this phase of oversold, which is undervalued, cheaper in price, there's also a lot of fear in the market. Typically when something's overbought, vice versa, there's a lot of greed in the market at that time, or it's a euphoric stage in some markets, or things that have been going up for a long sustained amount of time. So we're going to talk about the tool that I like to use, or that a lot of traders like to use, to identify when the market is in the overbought and the oversold stage. I'm also going to go over in this video how a lot of traders use this indicator wrong. There's a lot of things people do wrong when it comes to this indicator, or I would say there's a really common thing that people do wrong when it comes to this indicator, especially new traders. Remember, it's a tool. Price is one of your tools as well in the market, and that's one thing you guys got to understand as a new trader. As you mature, and as I matured in my experience, I remember in my first year or two, I would always focus on the indicator, what the indicator's reading, what the indicator's reading. You got to combine the two of price action and indicator. It can make much of a difference in your analysis and your timing of things. So this is something you're going to want to study when it comes to a step up from this, right? We're going to go over the idea of overbought and oversold, how to identify it in this video. A step up from this would be studying cycles, price cycles inside of these phases, because when the market's overbought, or let's say when the market's oversold, it doesn't mean that price can't keep going down gradually. It's like a build-up phase. Same thing with overbought. It doesn't mean that the market's just gonna tank down. Eventually, we can get out of that uptrend. So let's take it over to the charts. I think we got enough information on understanding the concept of overbought and oversold. We're gonna do this first example on a Bitcoin daily time frame. And our starting reference point is going to be January of 2024. So the beginning of this year. We're on a daily time frame right now. Now what I'm gonna do here is I'm gonna go to indicators. This is where I'm gonna search up, and the toolbar that's gonna drop down, where I'm gonna be able to search up different indicators that are really common and known to traders, like Bollinger Bands, the MACD, the RSI, the moving average indicators, the ADX. And if we scroll down the list, we can see here in the S's, we have this indicator called the stochastic. There's actually 3 of them when we look at it. So I'm gonna show you guys the one that I like to use. It's this one right here, the stochastic RSI. If I go to this search bar, when I click indicators, I can simply just like search it up. Like I could go Stoch. I don't even have to type the full word in. As I'm typing stochastic, it starts to appear. If I click that little star, it'll put it to my favorites column here, so I don't have to keep looking the indicator up over and over again. But there it is right there. That's the indicator we're gonna put on our chart right here. If I double click, the indicator disappears. Double click, it's back. See that? Quick trick, so you don't have to keep removing it and searching it every time. Because now I can focus on price action. I'm not just solely looking at the indicator. I can observe price action first, right? I can see like, where is price? Is it high? Is it low? What's happening in the overall market? Then I can go to my indicator and get an idea of what the indicator is reading, maybe what I should be kind of looking for soon, how the indicator works. Let's point to some things here. So how does this indicator work? If you look here, the indicator has a few different characteristics to it. There's 2 lines, right? One of those lines is called the K, one of those lines is called the D. Now these 2 lines pretty much kind of follow price action and the market. They're a little lagged behind price, but they flow through the movements of price. And what these 2 lines can help us kind of measure is when we are overbought or when we are oversold. If we look here on the right, there's a chart here that goes from 0 all the way up to 100. You can see up here at the top where my mouse is. It goes 0, 20, 40, 60, 80. Right now it's reading kind of at like 90 up here, right? So this is a key characteristic to the indicator, because as you can see, there's a point that we're gonna reference to being oversold as below 20. Overbought is gonna be above 80. So that equals overbought. Below 20 is gonna be oversold. Now, what do I mean by below 20 and above 80? Like, what does that mean? When we zoom in, the blue and orange line follows through price. There's times where price moves really high, like in an uptrend, and there's times where price moves like really low in a downtrend. So this indicator really helps read when price has been in, let's say, a strong downtrend or a strong bullish move, to keep it really basic. When you look at the characteristic to the 2 lines, right? There's times where they're below 20. For instance, 20 is way over here to the right. Remember where 20 is, the right side of the indicator. Above, we have 80. So anytime the blue and orange line, to simplify it for you guys, anytime the blue and orange line are below 20, the market is oversold. It's entering an oversold stage. There's different meanings, like we said, to what oversold can mean, especially depending on the instrument or the asset or the currency we're really looking at. Like, we're looking at Bitcoin right now. So for oversold on Bitcoin, it could be, is it cheap? Is it undervalued? Is there time of fear in the market, right? Because oversold is like a buildup of where buyers will start to come into the market, right? Oversold is a stage where the market can get out of, right? Where buyers are looking to accumulate maybe what they're viewing. This is a problem that a lot of traders make. They don't understand that just because it's oversold doesn't mean it's just gonna go up. It can actually stay oversold for some time before the market gets out of that oversold stage. So this whole entire price right here is oversold in the market in correlation to the indicator stochastic, right? When you look at Bitcoin, there's other times in the year, I use this as a reference point to start off, because if we zoom out and we look at the year, through the year, there's different times where this indicator is showing oversold, whether the market's at different prices or not, right? The market here, when it was oversold, was around 40,000. just pushing below 40,000, almost $38,000. So was it undervalued, right? Was it cheaper there? Was there time of fear in the market there, right? Go back and study. Look at the market here, it's oversold, right? The next time we were oversold, because that was in January, the next time the market was oversold was in February. This was when the market was at around 50,000, just trying to break it. And we pushed up. The next time after that was in March. So look at, like, when you match, okay, where there's support, we can clearly see oversold stages on the daily are really strong for Bitcoin here for buyers to step into the market. But it typically happens after a seller's rally, after the market has pushed down. The market still can be high and be oversold, right? If you're looking at here, for instance, right, on the daily time frame with Bitcoin, the market is oversold here. Overall on price is at a high point still, right? But we still do push up. So what's the thing that traders kind of do wrong when they look at this indicator? They will buy right when the market reaches oversold. That's a problem. Like, you don't want to be just buying because we're oversold right now. You need to be looking for price confirmations that support a buy, maybe in the price action or the candlesticks or the market structure or patterns, right? It could be as simple as looking for rejection candlesticks on the daily. This is where most traders struggle with this indicator. They will be buying when the market starts entering oversold. You actually want to wait and let the market stay in that phase, because think back to this picture. The phase lasts some time depending on the time frame you're viewing it on. If we're looking at a daily time frame on Bitcoin, time and time again, the market can enter an oversold stage. So let's look at more recent inside of this year. Over to the left, we have August here. We can clearly see in August that the market was oversold here, right? And we can clearly see the next time we were oversold was going into September, and then even more recent, October. But again, what do most traders do with this wrong? Most traders are looking at the indicator like, oh, we're oversold right now. I gotta buy, I gotta step into the market. But that's not how it works, right? When you look at these phases, they tend to spread out and last, right? It's a phase where selling is starting to decrease and we could be shifting over to buys. If you look at Bitcoin here, it hit $50,000, right? And then it sprung up and it formed a bullish close. That's your confirmation more than anything. If we go to recent price action in the month of October, look at Bitcoin here, for instance, right? When we reach oversold for the first time, we don't just go up right away, but we form some rejection candlesticks. We form some support here. That's the type of stuff you want to be looking for. Let's say when we're overbought, for instance, most traders would have been selling right here. Most traders would have been taking trades right here. I think the best time to have been taking trades was at these candles, looking for better confirmations on your trades. An easier one that might be a more clear of an example for you guys is up here, for example, where the market is overbought. Most traders would have been taking sells right away because like overbought, I got to jump into price. The key is to wait for rejection candles like this one up here. This is a solid rejection candlestick that forms while the market is overbought. Same thing on gold. So let's go over to chart on gold for more examples of kind of what traders do wrong. For instance, they're not waiting for price action confirmations like rejection candles or support and resistance while the market is overbought, oversold. You can clearly see the market goes overbought and oversold from time and time again here on gold. Most traders will enter a lot early or as the market is entering that stage, not waiting for simple things like a rejection candlestick on the 1 hour chart here, or even as we push up and make a higher high in structure, and then we form some rejection candles. Look at what happens next. As we push down, we start to slow here and you get a little bit of price rejection at a level of previous resistance. You have a break and retest. So even without the indicator, for instance, you could see price action here. Like, let's study price action. What does the market do up here? It makes a higher high and it starts to form rejection candlesticks. Oh, okay, it's overbought. This is a good signal as well, putting the confluence together. Let's look at price action just here, for instance. Here we have a resistance. Price breaks above the resistance, forms that same higher high. We pull back to resistance. What do we form? A rejection candlestick at this previous level of resistance. Okay, the market's also oversold. You don't want to tie it so much to the market's oversold, I gotta buy. The market's oversold, I gotta buy. because it might not be always the best scenario for that. You're gonna have to wait for scenarios like this. For instance, this is a good scenario where some traders might have gotten early, selling probably on that candlestick and maybe going into some drawdown, potentially getting stopped out. The key is to wait even for some bearish candlesticks to close while you're overbought, depending on what time frame you're also looking at. That can be helpful through different intervals of time frame. So this indicator, guys, is a really good tool. You just got to know how to use it on certain time frames. Like if it's looking at Bitcoin on a daily chart, it's like looking at the bigger picture, like how many times in the year was this thing overbought or oversold? Then studying those phases. Like if I look at Bitcoin on the 1 year here, right? I'm on a daily chart. Well, how many times was Bitcoin high? How many times was that extreme greed and also overbought? Those might have been some key times to be looking for sells on Bitcoin, right? Because it was at an extreme overbought level. Vice versa goes for the amount of times in the year. How many times was it oversold in the year and what prices was it at? Was it at a low price? What was it doing at that time? Where was the overall market sentiment? Because if you look at any time this year, Bitcoin was oversold on the daily time frame. Every time it was, buyers still stepped into the market, right? Every single time. It doesn't really matter where price was, whether it was on the higher or lower end of this range that price is in. You can see anytime we've really been oversold, buyers have always stepped in. Even 3 times recently, we've been oversold and buyers have stepped in. So in that phase, you're looking for price action, guys. So I hope this video was some help to give you guys a basic understanding of this indicator and maybe some things traders do wrong. Thank you guys for watching this video. I hope you guys got some value. Drop a comment down below if you guys have any question. Leave a thumbs up on this video and I'll see you guys on the next video. If you guys enjoyed this video, remember to leave a comment down below. If you guys have any questions, check the link out in my bio. If you guys are interested in more trainings like this, I have a lot of videos inside of my academy.